Yeah, so who are the participants in the foreign exchange market? Okay, who are the people that you are trading with? Who are the people that account for the trading volume that we have in the foreign exchange market every single day? Okay, first off, why is this information important to you? When you're going into a new field, you're learning a skill or you're looking to do something that you expect to profit from. So the first thing that you should do, is to find out how that thing came to be. What has been the driving force that has kept this thing? What was the catalyst for the formation of this thing? And what has kept this going on up until this moment? Okay, so that's the history, and then we've already considered that. So the next thing that you're going to consider is who are the people that I'm going into this with? Who are my competitions? Who are the people I have around me that are doing this as well? Okay, so this is what we have for you guys right now. The third thing will basically be understanding how that works. Looking for a way to get deeper into it. Okay, so basically these are the people that trade the foreign exchange market with us. So I believe by now you think to yourself, if we say that $6 trillion is being traded every day in the foreign exchange market, how does this figure come to be? How is this being calculated? Because retail traders like myself and yourself, I believe you're an aspiring trader, right? And then we have other retail traders worldwide. Some of us are sending in tens of thousands of dollars into the market every day, some $100,000 every day. Once you put all of these together, I really doubt that we even count up to 1/10 of the general volume that is available in the foreign exchange market. I really doubt that, because 6 trillion with a T is a whole lot of volume. Okay, so basically we have the investment bankers, big banks, companies and corporations, basically even the central banks as well. These are the people that come together to be able to give us the volume, the trading volume, the $6 trillion trading volume that we have every single day on an average. Okay, so depending on where you live, you do understand that there is a currency being attached to your country. So in our case it would be Naira. For other people it could be JPY, it could be Canadian dollar, it could be GBP, that's the Great British Pound, it could be the Australian dollar, CHF, AUD. There is over 130 currencies in the world, but then the ones I mentioned are the few top ones that are being traded due to the fact that they have better economies that are a whole lot more stable. And then you need to understand, think from an investor's perspective. You do not want to invest money in a country, remember that currencies are being pegged to countries. So you do not want to invest money in a country that does not have a firm economy. So you are indirectly gambling with your money, because anything could happen at the end of the day. So you really don't have investors coming to invest in Naira, okay, compared to Australian dollars, Canadian dollars, USD, Japanese yen and all of that. So more on currency pairs, the major and the minor ones later. Okay, so let's go straight into the different people or the different players in the foreign exchange market. So the first ones are the investment bankers and the asset managers. So who are these people? These are people that have portfolios, that are filled with money that companies and rich individuals are giving to them to trade. So a scenario is someone comes up to you, I'm a millionaire, maybe based in Dubai. I do not have time to trade the foreign exchange market. Basically, people that really have money do not want to be gambling their money or playing with it generally. So they are looking for people that have the experience, people that have the understanding of how the foreign exchange market works, and then they're telling them, please invest this money for me, and at the end of the year, this is the return that I want, 150%, 400%, 500%, whatever the agreement is with the investment banker. Okay, so when you have thousands of customers putting in millions of dollars every day, you eventually rake up a whole lot of volume. Okay, and then understand that there are some companies, real estate companies, commerce companies that are making exchanges or in different fields and different industries, that are investing money with investment bankers and asset managers. Okay, so this now makes them have a whole lot of volume, and they are being considered as the institutions. They count for 65 to 92% of the foreign market, foreign exchange market speculations. Okay, so a whole lot of people believe that institutions are what drive prices and then trade with that in mind. Okay, so 65 to 90% of the trading volume or the trading decisions and biases are based off of these people, because if these people have a lot of volume and they are placing a whole lot of lot sizes, a whole lot of volume for every single trade that they're putting into the foreign exchange market, or they're feeding into the foreign exchange market, the market is likely going to go in that direction. Okay, so think about it this way. So if money is being sent to a certain direction and saying this is what I want to happen, so in the foreign exchange market you have two scenarios: you're either buying or selling. So if these people are injecting, trillions of dollars or millions of dollars and saying we want the market to go to this particular place. The market is likely going to go there because that's where all the volume is coming from, and then it's coming almost at the same time. Okay, so this now causes majority of the movements that we have in the foreign exchange market. So these are the big players in the foreign exchange market. On to the next one, the big banks. Okay, so for the big banks, we have examples: the JP Morgan, we have the Barclays, we have DB, we have HSBC, which stands for the Hong Kong and Shanghai Banking Corporation, which is the biggest Asian bank. Okay, so these banks add a whole lot of trading volume to the market. As a matter of fact, they account for more than 50% of the volume that we have in the foreign exchange market. Okay, and this comes most times from they have millions of customers in the world, hundreds of millions of customers, and then if their customers are making payments to people abroad, if their customers are exchanging currencies for another currency, that's definitely going to cause a movement in the foreign exchange market. As soon as those orders from their customers, all of that come together, it accounts for hundreds of millions of dollars every single day. And then apart from that, these companies or these banks, or these big banks on their own, they perform proprietary trades, okay, through their traders, okay, from their own capital, to make substantial profit. Okay, so on to the next one, companies and corporations. Companies and corporations, they make exchanges, okay, for commerce reasons. So they're either sending goods abroad or taking goods by themselves, or they're buying raw materials. So let's take an example. The Canadian company that is selling something like a phone, in order to give you a phone, they need to buy the raw materials for the phone, or something that relates with the phone, maybe like the software from a company based in China that will sell it to them at a very cheap rate. So they pay that company, to get these raw materials or get the scrappy part of the phone, and then bring it and couple it here in Canada to be able to sell them at a costlier rate. Okay, that way they've practiced foreign exchange, by exchanging Canadian dollars for what the Japanese yen. Okay, and that is when these account, when a whole lot of companies and corporations are doing this daily, okay, it's going to account for a whole lot of trading volume, and then you understand that this is going to cause fluctuations in foreign exchange prices, okay, hence causing shifts in the foreign exchange market. So overseas commerce being done by companies and corporations, okay, is really important, and they account for a whole lot of volume in the foreign exchange market. So the central banks, how do the central banks affect the foreign exchange market? Where do they come in and when do they come in? Okay, so before we go into that, some people might refer to the central banks as general banks. Okay, that's not a problem at all. So all financial transactions effectuated by central banks, they do affect the economy, and make account for the increase and decrease in the currency's value. Okay, so every single currency is represented in the international for international exchanges, and it represents a country. Okay, so like the naira represents Nigeria, the US dollar represents United States, right? So for every exchange that is being done, okay, that is basically the currency of a particular country being exchanged with another. Okay, so when your country, like example is when we have a very bad economy in the country, or maybe when naira moved from $350 to over $500, okay, you'd see what happens at that particular point. So every single person tells you that life has gotten harder, right? Because naira has gone worse when compared to the USD. They now tell you that exchanging dollars is really costly at the moment. So if you go to the market to buy something that was initially maybe 1,000 naira, you get told that it's now 1,700. Why? Because of the dollar rate. Okay, so when you consider all of this, the central bank is the body that controls inflations and deflations in a country. Their work is to print money for a country, and then try to hold the economy, try to keep it stable. Okay, so at various times, foreign exchange market, affects the export and import taxes, fuel pump prices, the food you buy, and many more goods and services, And then, you need to understand that during moments of deflations, when a certain currency of a country is deflating, the central bank of that particular country, so like the Central Bank of Nigeria, maybe the Bank of America, and a lot more, depending on the country that we are talking about, they print money, to be able to, help curb the situation. Okay, maybe they're trying to purchase a foreign currency to be able to back the currency or use for international transactions, and by doing that, they're making their own personal currency, we could say. So due to the different things that central banks do, they are a part of the reason why there is volume in the foreign exchange market. They contribute to the volume we have in the foreign exchange market. And then lastly, we have the retail traders. Example of that is myself, yourself, whether you are investing $100, $200, $10,000, $40,000, $300,000, $1 million, as long as you are going through a broker, right? So a broker is like an intermediary between us and the foreign exchange market. So they provide liquidity, right? They give us price quotations, and they're able to connect us with the foreign exchange market. So once we fill in an order, they're able to take our order and place it in the foreign exchange market for us, depending on the type of broker you have. If it's a straight through processing broker, an ECN, there's a whole lot of things, but then that's not really important to you at this point. Okay, so as retail traders, we take trades, based on biases that we have for a certain currency. Maybe this particular currency will appreciate over this due to different reasons, such as believing that there is inflation in a particular country, inflation rates, policy expectations, and maybe any other fundamental news. This could be the reason why we are deciding to get into a certain trade. Okay, and then there are other technical confirmations, which accounts for more than 80% of the reason why retail traders take trades. It could be anything, any of the technical concepts, such as support, resistance, pivot points, trend lines, Fibonacci's, Elliott waves. It really could be anything. But then when you put all of these together, these are the things that form the technical backings behind why retail traders take trades and why they see price going to a certain level. Okay, so more on that later. But then these are the participants in the foreign exchange market. See you guys in the next lesson.